Hi traders, in the last video we looked at position trading with the GBPUSD and we drilled into 3 time frames on monthly, weekly and daily. And in this part we're going to be looking at how to actually position size on this position trade. This and more in this video. Hi traders, thank you for joining the Master the Markets team in our live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Stu Narpan here, founder of Master the Markets, the Traders Conference and the Traders Open Day. So here we are traders on the GBP USD. In the last part of the video, if you haven't watched it, do look at it because we looked at the 3 principles for position trading. Okay, the 3 points on position trading. In this video, I'm going to be looking at specifically position sizing. Now, how should we position size on a position trade? Firstly, take a look whether it's your normal trade setup. Okay. Now, how do you look at that? As I said before, there is one anomaly here on this particular trade. On a monthly, we look at the direction. We said we're going to take long on this. For those of you who missed the last part, definitely do go and watch it, part 1.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Now over here, traders, what we are looking at, which is a anomaly that we looked at in part 1, which is it's the first interruption of a top to bottom trade. Okay, usually in the first interruption, usually doesn't turn straight away. It usually might go down a little bit before it turns around. Now, so in anomaly trades like that, so if we got a misnomer trade like that, what we then do is where we were looking to enter in the blue and the stop loss for the red line, we would reduce our position size. So we'll reduce it from 1% usually to 0.5%. Okay, so usually if you're taking it at a standard lot size of $10, one lot, you can reduce it to $5. Okay, and whatever your position sizing rules are. In this example, I'll be taking this trade and basically at about 0.5. Let me just show you how we place actually the trade over here. So over here, I just reduce it to 0.5. There'll be a pending order here. And over here, we'll be looking at the order to come in at the close price of 11588. So I'll put a buy stop here, 1.15588. Let me just quickly check that. Is that right? 1.1588, isn't it? 1.1588 is what we have over here. So that would be 88 would be 1 pip, say 89, I'd be 11590 is what I will round it off to. And then after that, the stop loss here is for the low of this bar, which is also the monthly low as well. So that would be 11404, okay? 1.11404 is our stop loss. The take profit level, we will place it later as the trade progresses along. Okay, so that's what we're doing over here. Let me place that trade. And did I do it at 0.5 as well? Let me just quickly just check that. Yes, I did that at 0.5. Just check, make sure that the position size is done correctly. Okay, we've done that at half the size, our normal position size, because of the weekly being the first interruption.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Okay, now what we're looking to achieve out of this trade, we're looking that this daily bottom here, okay, becomes finally a weekly bottom as well. And then, so this bottom here, which is a daily confirmed bottom, becomes a weekly bottom. And then finally, with holding a weekly bottom, then eventually becomes a monthly bottom as well by going up and up further, just like how we did over here, up and up further, and then it became a monthly bottom. Okay, so that's what we're looking at. And over here, there's another example here of the weekly, the monthly bottom, the daily bottom becoming a weekly bottom, and finally a monthly bottom here by this bar, which is over here according to our formulas. This is why I've said in many numerous videos, conferences, and seminars that quantifying your tops and bottoms is the first step. It's not the holy grail, but it's definitely a first step of seeing the market in a structured, systematic, methodological way. Okay, because it solves a lot of issues that you may have later on. All right, traders, I believe that's pretty much that on this one. So do understand how we position size, how we place the trade as well. Look at part 1 as well. Look at this. In the next part, we'll be looking at more how we are going to be trade managing this trade. Okay. All right. So definitely reflect on this. Use the principles onto your strategies as well, whichever may deem necessary. And if you do not know any of the terminologies or concepts that we talked about here, look at our Trader Starter Pack video series, both for beginners and intermediate traders. Traders, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.